All right, here we are. Still on the weekend, but let's do a third post. And if you haven't figured out by now, I've been doing a lot of house cleaning, both physically and mentally, as I get ready for the third quarter. And I've just been thinking about a whole lot. Anytime I kind of get in this mode, I tend to post more often than not. So I thought I would have at it again this time via video. And touch on a couple of things. First of all, you have probably noticed by now there is a clock counter or a date counter, if you will, in the top left-hand corner of the blog. And I want to talk about that in terms of why it's there and in terms of the benefits and the risks in doing so. First of all, I just want to put it out there that is in no way an attempt to say, gee, look what Don has done for X period of time. If it isn't crystal clear by now, this blog is an ongoing journal about everything, every part of this business. And I tend to focus more on the downside purposely, and I won't go there, but I want to explain why it is there. And how I'm going to use it. I'm trying to find the post. Maybe I'll find it and I'll link to it by the time I'm done with this, or by the time the video finishes processing before it's loaded. I did a post several months ago, maybe even a year plus ago, on momentum. And momentum is such a strong focus in this business. Whether it's the momentum of a chart. Once something breaks out, it just has a tendency to keep moving in its direction until 3, 4, 5 pushes, and until it peters out, plateaus, and then starts the process again. And so we certainly see that in terms of trade charts. We see that I know across the board in terms of performance records. And performance records, in my view, if you look at anybody's performance record and you charted it. It would look, very much like a stock or a futures chart, with your various oscillations and plateaus and streaks and breakouts and pullbacks and that kind of thing, and ceilings and testing ceilings several times before you break through and things like that. And I could give you all sorts of examples in terms of momentum. I've seen it so clearly in my own trading over the years, and I know both through those times, as well as being involved in sports over the years, it's just an incredible asset. Okay, so it's my attempt during the slow days of summer, if you want to call it slow. Although from a trading perspective, it's not necessarily slow at all. You can do very, very well in a market that doesn't move very much, if you understand that that's going to be the rhythm of the day or the week. But it's my attempt to A, have a little bit of fun, B, continue to work on my consistency, and C, just try to establish and increase the momentum in terms of my own trading. And I guess I could throw a D out there in terms of I really encourage everybody to consider doing something like that. Have some fun with it. Play some games with yourself. The whole 08, 09 thing for me was the result of a silly little game. I threw a target out there, and I worked my tail off, and I was focused on it for every minute, every hour, every day for a very long time, and it started as a game. I can go back to other phases of my career, the same thing. I'm currently in a phase now, got a little bit of momentum going, and so I'm looking for ways to say, gee, let me see how long I can keep that going. And before you know it, the dollars start adding up, and you start doing things that if you thought about it ahead of time, you'd have said, well, there's no way, But if you just start like this and establish some momentum and keep it going, the hours turn into days, which turn into weeks, which turn into months, quarters, blah blah blah. So that's why I'm doing it. Now there is a huge risk in terms of consistency goals, right? And I've mentioned this before, but I wanted to emphasize it again, and that is the ultimate objective is earnings. Whether you measure that in terms of rate of return, which I don't, or in terms of raw dollars, which I do, that is what's most important. I'd rather have 4 losing days out of 5 and if that's going to result in a windfall in terms of dollar bounty on that fifth day, then to have 5+ days, making $1 a day. And so, I've got to be very, very careful when I look at an objective like that. But, so long as you balance that with other objectives, I think it's fine, and I think it's healthy. And if nothing else, as you're getting toward the end of the trading day, if you have a tendency to get sloppy and over trading and taking lower probability setups, if you have that sort of a goal in front of your face all the time, come 3 o'clock, you might be less likely to risk what you've earned for that day. So, a double-edged sword. I've seen how powerful momentum can be, certainly in my own trading over the years. So, it's there. Have some fun with it. I could have a loss on Monday. But the other aspect and the other tweak I made to that is I wanted to put the weekly number up there as well, because I tell the jellies this all the time. The minimal P&L time frame I think anyone should look at is a week. Because you're going to have losing days. Remember, my largest losing day ever, October of 2008, was a Monday, and by Friday I was positive. That for the week, and that's what's most important. It helps you, I think, expand your outlook from the micro perspective, whether it be on a trade or trade sequence or daily basis, to something that makes some sense in terms of money, which is weekly. So, it's there for a couple of reasons. So those are some thoughts anyway. I got other things I'll chat about over the course of the week. So just wanted to touch base on that. If you haven't caught the earlier 2 Weekend Trader text posts, have at it. Have some fun, and you'll see what's going on at this end, and I'll keep you up to date. Have a great rest of the weekend. We'll see you next week.